Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is going to be for the close of Wednesday, the 20th of March, 2019. But we're not really at the close. We're just approaching 3:30. This will be where the settlement prices are. And I've timed this pretty accurate. The market just now, literally as I'm talking to you, reopened. So we're just after 3:30 p.m. This will be just in the zone that this market's going to put its settlement price in. So we've had reversals, and finally the resistance areas that we've spoken about have shown up, except in the NASDAQ, which had another stellar day. When you look at what's going on in the metals, they've had a bounce, but the settlement prices, they were done at 12:30. Remember that. Settlement in metals, 12:30 p.m. Central Daylight Time, which means these markets closer to 13.01, not up $6. Silver closer to 15.31, not up 10 cents. It'll change tonight, but not on a settlement basis. I'm telling you where these markets are. In the dollar index, you got pretty well hit, and the euro went pretty strong to the upside, and the reason has to do with the Fed changing the dot plot. Yesterday I was on Fox TV and I was asked what I thought, and I said two things. Number one, I think the Trump administration is overly optimistic. Number two, I'm of the opinion the Fed's going to step back. One was the most that I'm looking for, but I think it's none and done. And that's what the Fed today came out. They said that from now through the end of the year, no more rate hikes, and they're going to be done running off their balance sheet by the end of September. That's very important. That's another monetary tool. And I realize so many analysts say that balance sheets aren't a way to control monetary policy. I don't agree in any manner whatsoever. If you start pulling the balance sheet down, not putting money into the economy or rebuying treasuries or doing any of that, you can drive interest rates up or down without changing interest rate policy itself. Got that? That's my opinion, at least. A big number today in the crude, and I'm talking huge decline, 9 million barrels in just the oil on the EIA. That was huge compared to what the market was looking for. And the market up another $1. The question is it getting ahead of itself? So when we come to the S&P, I drew this line at about noon today. I wanted to see where the market was. Remember, this is going to be a close-only basis. It was here. This is where the market's actually going to close. I just wanted to see the comparison in worrying about what the Fed did. When I look at where we're at, we still have, I can argue, an inverted head and shoulder. A shoulder, another one, the head from there to there. We haven't gotten up to the counts. Down day today, yes, but nothing that's terrifying in the market. Should you take out the 28.0850, the last break low? I've marked off these, what I think are the lows on the swing line for you, not what I think, what they are. Well, then you've got to look and see where the 18-day average of closes is. Comes in at 28.0150. The next thing you got to ask yourself is, what did the Fed do and how's it going to affect stock indices? I'm writing about that in my market report, and at the end of this, I'll show you how to get that report. But what we talk here are charts. So the chart action can go neutral if you take out 28.0850. The resistance has been the upper Bollinger Band, and as I've said, this market, and I've been writing about it, it's churning slightly higher. It hasn't broken out where it can stay over that band. And it's still doing that, and it's in an overbought condition. Now, how many days are you over right here with the red line and the blue over the number 80? You certainly are today. You were yesterday, and you were the day before. That's called embedded. Embedded happens when you convert a market from being overbought to locking in, be it if it's to the upside, a bullish trend, if it's under 20, a bearish trend, but it's got to do it several days in a row. If it loses it tonight, which is my expectation, doesn't mean I'm right, but if it loses that on the reopen tonight, be careful. It often leads to price and the 18-day average making a run at each other. If the 18-day average stays under this 28.0850, you, for the first time in a while, lose that pattern of higher lows, higher highs. It cannot start a bearish pattern. Why? Let's assume the market just collapses through 2808.50 and under the 18-day average. You'd still have, the way I define this, a higher high and then a lower low. And as simple as it sounds, traders look at these patterns on them. They look at where potential resistance may come in from one of many different areas. Often, be it a pivot point, Bollinger Band, these numbers seem to tie together. Not every time, but they seem to. So I would be surprised if we don't get back to that number if you open lower tonight. In the NASDAQ, this is the powerhouse. It keeps riding the upper Bollinger Band with the embedded reading, and it's got the outside day up. Your warning sign will be if you take out today's lows in this market. When you take out the low of an outside day up, often, the word is not always, it's often, what I've learned on my charting, is that brings price and the closest moving average together, and in this case, it's the 18-day. In the Dow Jones, the market was not strong enough to get up to the upper Bollinger Band, and it's doing something that's crystal clear. You've gone sideways in this market. You're not making the new highs. We know Boeing's been weighing on the market, and then you get the fines out of the EU on tech companies and so on. But the pattern is one of pretty much tonight neutral. You've got a settlement that's going to be under the 18-day average. The swing line has been up. It wasn't strong enough to get to the upper Bollinger Band, and momentum is flattened out. In the Russell, today's break at 1538.50 took out this low. So the two weak markets are the Dow, you can see that, and the Russell. The Russell's the weaker of the markets. It is out of its uptrend as well. It's got a higher high and a lower low. Momentum is down. Bias is down. Next support level, 1524.60, let's call it. If that were to give ground, then the 100-day average. What about on rallies? Because if the market does rally, I'm going to look for the 18-day average, that 1563.80 to be the resistance, with traders saying the market shouldn't get back over 1577. But the problem is you're not trending. That higher high, lower low, it makes it a difficult situation. If we take a look at what you did with the VIX, as I told you, I thought the pros were writing puts against the lower Bollinger Band, trying to get prices up to the 18-day average. You lost the embedded reading today. Do you see that? If we come to it, both numbers under 20. This was yesterday, under 20 the day before, under 20. When that occurs, my rule of thumb, and this is what I teach in my charting course, is that prices should try to get to that 18-day average for at least a neutral number. Doesn't mean it can't go higher, but that's the number that I often look at. We'll see if that happens now that you've lost it. When can you regain the embedded reading is another question. The day you lose it, the only day you can get it back before starting the whole process over is the very next day. So you'd have to have this number come down hard in order for it to re-embed. In the bond market, you know what I teach. I say that the first time you hit a Bollinger Band, be it on the upside or downside, that's where I think pros are waiting and taking money off the table. Now, what do I mean by that? I am assuming that the pros are going with the bias of the market. If it's over the 18-day average, they're looking at upside bias. Under it, they're looking at downside bias. And yes, you do play against that number for a while, but we're talking when you expand out. You tell me where you got to. I think that's pretty much right on the money. 147 and 5/32. It's exactly where you went. 10-year note, where'd you go to? And stop. Where'd you go to in TLT? You didn't quite make it. You're knocking on the door of getting there. You're very close. The difference in this market is, unlike the others that at least had some uptrends, you don't have that in TLT. You made a lower low and then the higher high, and the market is overbought. When I come over, when I come to the next chart, I want to get that for you, the dollar index. The dollar index, since up here, has had lower highs, lower lows. Today's juice from the Fed kicked the market down. Now, the low today was 95.17, 95.16.5, I think is the lower band there. You're oversold. I would be surprised if the pros weren't taking some money off. But other pros are going to say that this high was the high, and that the dollar might be entering a longer-term trend. You got to look at your weekly charts, and we'll talk about those on Friday. In the eurocurrency, look where you went up to and stopped, right against the 100-day average in the upper Bollinger Band. You are overbought. I think pros are trying to take some money off the table there. The question is, if you're long, how do you get back in? That'll be one of the things that they ask themselves. In the British pound, we've got a new pattern of lower highs, lower lows. The settlement today is 132, or well, right now it's 132.63, which is over the 18-day average. But again, this 18-day average, that line in the sand, it seems to stop the market. Any move tomorrow down with momentum starting to break down, a new bias could kick the market all the way down here. What's happening now? Miss May is having meetings. She's trying to get an extension. I'm talking the British Prime Minister from the EU. The EU is balking at parts of what she wants, not everything. I don't think the EU wants a dirty separation or a hard one either. It's a problem, a real problem, a hard market to trade. In the Japanese yen, if you look at yesterday, you had a market that still had lower highs, lower lows, but you closed over that 18-day average of close. Well, did we? Let's see, we finished 90.39. No, that was 90.52. We closed under it. Today, when the market made a lower low and then took out yesterday's high, you had an outside day. Now you've kicked the market into an uptrend. Higher lows, higher highs, but you went right into the first resistance level of the 100-day average. The next resistance is 91.16. I think the pros, again, are taking some money off the table. In Bitcoin, I think a bottom has been made as a chartist. You know, do I know what Bitcoin is? Do I know that it has a use? I'm not getting into that with anybody. I'm just saying the chart pattern is one where it's sideways action, trying to break out to the upside. It is overbought. It's going to have its fight here. If it can pop out, the 100-day average becomes the area that the market's next resistance would be at. What turns it back down? Take out the lows of yesterday at 39.50, and you could end up with lower highs, lower lows, which puts into play the 18-day average of closes. In the crude oil, we've been watching the spread between Brent and the U.S. tighten. Well, I'm saying it wrong. Loosen up is probably the right word. And why? Because it's shrinking. That's the way to look at it. And the reason is we're losing our supplies at a pretty dramatic rate. I was shocked when I saw a 9 million draw today on the crude stocks. It was double the API number, which I thought was big yesterday. In any case, you're fighting a battle like you are in stock indices. You're up at this upper Bollinger Band. You're in overbought territory. It's a danger. In order for this market to do anything, it's got to break out of this sideways action. Does it do it to the upside or downside? Well, the odds are still favoring the upside, but it is overbought. You've got two layers of support if you break under the 18-day average. We'll see what happens. I think the bulls are still in control, as I think the bulls are in control of WTI. Higher lows now, higher highs. Embedded reading, that's the difference. This chart looks pretty strong. Do you buy Bollinger Bands? Well, I teach not to. That doesn't mean I'm right. In the Reebok, since I wrote that metals report, and it's on our website, I think we take it off after 5 days, and I didn't write it. It's a new video report. We've had these higher lows, higher highs. You're just running that number. Spring is coming. People want to drive, and there's big draws in the gasoline. Now, the distillates are what's going to come. We have to watch that and see what they do. But in my report that I wrote today, I showed how we're under the 5-year average of distillate and gasoline stocks. When you look at natural gas, the market stalled here, right at the 18-day average. You know, when you look at it and you take the name off a chart, 1, 2, almost 3 out of the past 4 days, you just keep hitting this number, looking for a direction. It still is. And you got divergence. You got momentum trying to point down, the bias down, but the swing line up. One of those weird charts. As I said, I write a lot. I put out videos. I put out 3 levels of research. I do a morning video that people can have a separate subscription to. They can have a full subscription where they get my written commentary and written trade recommendations, or they can get a commentary only. I'd like to throw all 3 at you if you haven't tried it. It's free. If you've tried it, nah. I give 1 trial at it. Give us a call. Go to our website. Once you sign up, I'll put you on that. You'll get about a month's worth of it. And you decide for yourself, does it fit in? And you can decide which level of it best fits you. You can also click here. It'll take you right to our website's carousel. Sign up for other offers as well. I'm Ira Epstein. Have a good day. Talk to you tomorrow.